I think I get a lot of credit for good luck. I don't actually think I understood it that well. And, the hand of God needs to... There's one factor which Ramdev didn't put here for getting 100 baggers. The hand of God needs to be on your head. It's vital. I would say it's the single most important factor in owning a 100 bagger. You can be damn smart, you can put in tremendous homework, you can do all that you want, and you will still not find 100 baggers if you're not lucky. So I think, I get an undue amount of unfair credit for Infosys, but let me try and address what Naveen said. So I used to work for a while in CRISIL, and during that period I was fortunate enough to have been sent on a secondment to Japan to work for a bank called Industrial Bank of Japan, which is now called Mizuho. It's one of the largest banks in the world. And when I went to Japan, I was very young then, this is 88, and I was just stunned by how the common life of every single guy in Japan is affected by technology. It was just something unbelievable. So if you're walking on the road, you can buy dinner from a vending machine. If you went to a railway station, you didn't have anyone selling tickets there. The first time I went to a station in Japan, I was completely lost because I was Indian. I was looking for a window where I could buy tickets, and there wasn't one. And it was a Sunday. So either I could have stood at that window for the rest of my life and not gone where I wanted to, or figured out how technology works. Or if you see, for instance, the bullet trains, which actually I saw in Japan, another illustration of technology. But what I came away with from Japan was that if you can, come up with ways to make, equipment function more intelligently and in a way that helps, everyone in their daily life to be more productive, that's really the power of software. So I remember coming back and telling Ramdev, we don't seem to have this in India. Why don't we, why don't we look out for people who may be thinking of doing this? And on that, completely benighted premise, when I first saw Infosys, I said, gosh, maybe these guys can do it. And I really didn't, I thought a server was someone who gave me dinner at a restaurant, and I still think so. I haven't changed my view on servers subsequently. And I thought open architecture was like the place where I studied in my MBA, the Louis Kahn Plaza in IIM Ahmedabad. It's got a lot of holes, so we call it open architecture. But it didn't make sense to me. What did make sense, and I think the driving thing that made me buy Infosys, is something that he spoke about, which is very important. In 1995, I went with a Scottish fund manager called Ian Wells. I used to be in broking then, and I took him to meet the top management of Infosys, and we met two people that day. A gentleman called N.S. Raghavan and Mr. Narayan Murthy. And I came back absolutely stunned by the honesty and the clarity of purpose and the will to succeed that I saw in both these people. And that's really what made me buy Infosys. I had never met a person like N.S. Raghavan in my life. I think, Mr. Narayan Murthy also incredibly fine human being, and he did a huge amount for the company. NSR stood down for Nandan Nilekani to become managing director when his turn came, because he was the oldest guy. So he should have followed Mr. Narayan Murthy, but that's a sign of the greatness of the man. He said, I think Nandan deserves to take it, the younger generation. But these two guys were instrumental, and as he said, it's about management. If you can find outstanding management aligned to a fine business and buy it at a reasonable price, and the growth is sustainable and doesn't need huge amounts of cash to fund that growth for long periods of time, I think therein you have the makings of a stock which can do extremely well for you.
The first step in this whole investment process seems to be S, which is catch them young, catch them small. Madhu, do you want to share with us some of your young finds, young catches? And as Ramdev pointed out in his study, often these are not necessarily the most popular. You don't get the validation from your friends.
Yeah, absolutely. First of all, the disclaimer needs to be repeated that whatever we are speaking here, because these days SEBI is very stringent, is only to express a particular thought which is there in the particular stock, and there is no recommendation which we are making remotely as well. So I think, Naveen, first of all, what Sanjay told, that's the most important thing, that only in a hindsight do you realize that it was a 100 bagger or a 50 bagger.
Yeah.
That, you need absolute God's grace, a lot of luck by your side. And it is often, we only talk about the successes which we have had. The failures go unnoticed.
Yeah.
So I would say honestly that for every success which we have had, equivalent to 10 failures or more, we have had in our portfolios in the last 10, 15 years. And important thing is that, the successes have been much larger, so we have been able to digest the failures. So the first thing which we look at is, as Ramdevji was saying, that the company has to be small, because by definition you can't buy like a 40,000 crore market cap company and hope that it will go 50x or 100x. And that comes with your first philosophy. Do you really believe that equities is for disproportionate return? Because if you are an index investor and you believe that you are going to get 15% return, which is what the earning growth is, then you will look for that kind of companies. So I personally believe that equities is for disproportionate return, and we should be at least having few stocks in our portfolio which can provide that disproportionate return, which makes up for the entire portfolio. Second thing is, once you believe that, then in the environment in which you buy, so most of the companies which you will see, even let's say something like Eicher Motor, which Ramdevji mentioned, it has gone through, before it became a multi bagger, it had gone through huge pain, and before it bottomed out, all kinds of business models they've tried. So these companies will completely be out of fashion. By definition, they will be small, and you will have to keep trying, and you make like 5-10 attempts to buy this. Then over a period of time, it becomes clear to you that this one has a larger potential, and that's how we go. The third thing, at least, which we look at is, what is the size of absolute market cap and absolute opportunity? Let's just give me an example. Even up till 2007, the entire pharmaceutical sector put together was half the size of DLF in 2007-8. Okay? And once we realized that this sector, there is obviously 100 crore Indian people who are going to need drugs. There is this generic opportunity which was clearly unfolding. And we believe that, basically if India can have 20, 30, 40 lakh software engineers, why can't we have 100,000, 200 or 200,000 PhDs in this country, wherein some amount of work which is being done on research can be shifted to India. So everything was there, and size of the absolute market cap was very, very small. And you look at what has changed today. Now Sun Pharma is equal to the entire enterprise value of the entire real estate sector in India. So in 6 years, the clock has turned completely. So when you identify a sector which can be really promising and an absolute throwaway market crap, and then you start to work. And in management, a lot is being spoken. But I personally see only one thing. I meet a couple of times the same people. I want to see the passion. And in my life, that's one most important thing for any success, whether it is a success in investing or whether it is success in business. You find that guy who's really, really passionate about what he's doing. I think a lot of your work is done. Then the philosophy, then everything. A lot of things people learn as they progress. Even I have learned a lot of things. I keep learning even today. So for that, we keep meeting the management many times. We keep meeting the people who are surrounding them. That are they really passionate? Are they really hungry? And within that, then you will find out of 10 or 20, that one guy who has it.
Yeah.
And then your work is done.
Great. Ramduji, your vision to see has been very well articulated. You talked about several frameworks. Value migration has worked for you. Do you want to talk about how you've sharpened that vision to see through the lens of these frameworks over a period of time?
I didn't get it.
So basically, you've presented many frameworks: the profit pool, dominance. You know, we talked about network effect once upon a time. You know, you have innumerable frameworks that you've accumulated. Which one of these frameworks have helped you the most in this process of money making?
Yeah, I think of all, value migration seems to be the biggest one. I mean, the book was gifted by one of my friends. I wish he was here, Ravi Chadda, and I think it was in '94. And I read the book. I sent, I think, at least copy to him for his approval. Whether it is good book or not, I don't know whether he read or not, but I found it fascinating. And I could see the trends. So the first pick on that after the book, see, I mean, that's how I work, that's how my mind works. I don't have a lot of advantage of working in real industries or say credit rating, or so I don't have that experience. So I look at more financials and the frameworks. So I saw it was dominated by Bajaj. We used to go to AGM speeches in Pune. So, and he only wrote the two-wheeler report. And from there it was very clear, market is headed for shift from scooter market to motorcycle market. From a 90% scooter market, this country was heading for a 90%. I mean, I didn't know 90%, but I could see the migration. And I was also an owner of a motorcycle, Hero Honda, and that brought Moti and us together. So there was this bike was in short supply. There were 3,000-4,000 rupees premium also. And 1,000 crores sales, 1,500 crores sales, profits of about 80, 90, 100 crores. Stock was allowed for 1,000 to 1,200 crores. Huge dividends. That time also they were paying out good dividends. So everything was in place. Management was, I didn't have that kind of framework that Honda and Hero, but they were awesome management. At least Honda, we knew that they're very big. Globally, they have 50-60% dominance. So it was, you couldn't have, the thing was that you couldn't have lost money. So we bought into that, and we made good money, and very quickly it got doubled in 2 years or less than 2 years. Then once you have the success, initial success, then you sit on. And in next 7 years, it became, say, 20 times. And then rest all is a story, because then it became so much of dividend and all. So like this, second idea came in Infosys, but that was not, it was a value migration of the highest order. Again in '97, immediately after this, so the concept of Y2K, that the world is going to fall apart in 2000 if you don't change those 2 digits properly. And you needed all the Indians to change all the software in the world. So I could see a dated opportunity and a huge value gap. And that time I heard Narayan Murthy say that Indian cost, American value. So work has to come here and we'll make a lot of money. And that's what really happened. So we bought at almost 1/10 of the price and we made big money. Then third value migration opportunity came was Bharti Airtel. When I could see, I went to New York and I was sitting in Smith New Court. There used to be a company here. I think you have worked for it. So huge tower and all that. We were sitting here and one guy comes, one sales guy came and we were waiting for 10 minutes for that guy to come out. And this guy took out phone and flapped it and he called and that guy came up. Whoop. So I said, what is this? So I asked the guy, what is this? What he used? He said, this is called mobile phone. This was 96. So we didn't have phone only, forget about mobile phone. So in 2003, when we got it here and when it started coming in, then I was very clear that this is going to make a lot of money. The first mover, massive need, there is nothing else. And in India, you couldn't have done the fiber. No way, for millions and millions of people. So everything was just, but it was making losses. So when the IPO came, it was 45 rupees. So he was in investment management at an institutional side. We told him that, boss, you are going to lose money at 45 bucks. So fastest finger first, we made every single guy sell it and it came to 18, 19 rupees. Then the company broke even. And then we said, let's pile on now. This is 23rd January 2003. And I was very clear, we are going to make a lot of money. Because of this payback ratio thing, I calculated in the next 5 years, this company is going to make 26, 27,000 crores profit it ended up making 32,000 crores profit, and you could buy the stock for 5,000 crores. When I bought the stock, the beauty is that after that, everybody, all the dear ones, they told me, this stock doesn't belong to you, sell it. And they made me sell. That's the beauty. By 30 rupees, I was out. So again, I bought it. Then my telecom analyst went to the Reliance, and they scared me that they are going to finish it, by disruptive pricing and all. And they did that, but actually they had expanded the market. So the story became even bigger. So again we piled on. So what happens is when you have the framework, you have the confidence it is going to happen. Because frameworks work, like quality and growth. If you have both of them, nothing can shake you. Quality, growth and cheap price, it's a done thing. You can close your eyes and buy, put your life to that. So the frameworks have that power. 2 by 2 has power. I mean, nothing, very low probability that things will go wrong. So that's why I use the frameworks.
Okay. The next step to this 100 bagging, Madhu, is the courage to buy. And often we've seen that you're very lonely at that stage where the company is not necessarily popular. Nobody talks good things. He in fact ended up selling his Bharti after having bought it in the first round. What is it, you talked about passion in the eyes of the management. You meet them a couple of times and look for it. What else has often ended up catalyzing or triggering that courage that you require to buy?
And buy it big.
Yeah, I think first of all, we have to have the money, So when we started, we had a lot of courage, but we didn't have enough money. So when we started, our fund size was 12 crores. And we had 2 schemes. So I think the courage comes from your size as well. Because when you are successful, of course you have too much courage. But nevertheless, we had too much courage. And that's why we, as I said, that for every success we had, we have had many failures. And I believe it's a process of learning and trying. We are not born investors. Neither, I have never met Warren Buffett in that sense. We started our journey in 2003. And it was basically a journey when you try something, it doesn't work out, and you learn from learned people like Ramdev here, and then you go and try again. So I've learned something new today, maybe I'll go and try again. So I'm saying that the final courage comes, to be honest with you, with the price.
Okay.
You buy something and then you see that the overall absolute market cap and the price is behaving in a manner in which you would like it to behave. And once it goes like 3-4 times from the price that you buy, then you break free. Basically, then you know that I can't lose money here. And then, you can, basically I'm just speaking my heart. And this is the experience which I have had through the investing process. So you buy something really brilliant, it goes 50%. Your courage is lost there because you 100% know that there's something wrong which I've done. After that it goes 100 times, 50 times. But first time you feel that it is, you got it wrong.
Yeah.
And then, there will be a lot of factors. There will be the continuous performance by the company. So that gives you even more courage and consistency. So what he told me that I am going to go 25%. And if 3 quarters he grows 27%, then he is meaning business. He is telling you what he is going to do.
Yeah.
And then you see a lot of other qualitative factors. But I think the courage is, if you have to summarize it in 2 words, A is the size of your portfolio and size of the bet which you are willing to put on these kind of companies.
Yeah.
And second, once you see the bet starts to work, and as he said, his study also said that first year is very, very crucial.
Very crucial, yeah.
And most of the people who are in the stock market, I've seen, there's a lot of inflexibility. You say, उसने ले लिया मतलब यार मैं तो रह गया. And why should I've seen a lot of successful investors refusing to buy companies which have gone like 2, 3, 4 times, and they miss on the 50 or 100 times.
Absolutely. Absolutely. So the test of the courage is really when you had the vision to see, you envisage the whole story in your head, and things have not played out. The stock falls. Sanjay, how do you deal with that?
I'm not big on this courage thing.
Okay.
I think it's all hindsight. I think it's all hindsight. I don't think this courage thing is that important. Bud Labiton may have said it, or Tom Phelps may have said it, but I think, this is post facto rationalization. To me, bear markets are fantastic opportunities to buy high quality companies at ridiculous prices. I don't have any courage in today's market. I'm not going to go out and bet the house at 27,600 at a PE multiple, which is half a sigma above 15-year average. In the stock market, you don't come here to get Mahavir Chakras and Paramvir Chakras. There are no medals for valor. If you want to do that, join the Indian Army. The Indian Army needs people. Especially when you're an institutional fund manager. You know, I'm often asked the question, why isn't more money in equities there in the Indian mutual fund industry? It is because Indian fund managers have had too much courage.
Sajay, can I just come in here?
Yeah.
See, what Naveen is hinting at, you know, you don't need a courage to buy 0.5% of your portfolio.
Absolutely.
But you need a courage to buy 10%
So the
of
answer
your
to that is integrity. For me, what makes me buy is if I find a manager, as Ramdev said, who has a high level of competence and outstanding character.
That is your...
I'll give you an example
Yeah,
of something that I did recently. Persistent systems. You meet the guy, you know this guy. If you went away for 10 years to the Himalayas and came back, you can leave every naya paisa you're worth with him, you'll get it back.
So
I want to see that before anything else. I don't care about how smart he is. In fact, as Buffett says, if a guy has incredible passion and energy and he's a crook, that's the quickest way to go down the chute. He'll kill you. And 95% of Indian managers are like that. So this courage business is derived from integrity in my case.
Yeah. So you...
No, but Bhatta, I mean, one is that, yes, high integrity is there, but allocating really, say you're managing, say, $1 billion fund, okay? In that too, see, if you buy a 10, 15 crores or 20 crores, I don't think that's going to make a difference.
No.
So you have to have a percentage.
Correct.
If you do 5%, that's something worthwhile, it will make an impact.
Correct.
So allocating 5% is peaceful for you just because the integrity is
See,
very high?
you can't have 100 baggers in a $1 billion fund. What is the average market cap you need? In 6,000 crores, a 5% position is 300 crores.
Yeah.
So what will the market cap of the company have to be? If you want to own 5% of the company, it has to be 6,000 crores.
Yes.
So in mutual funds which are large, you never find 100 baggers. It is lucky we are all retail investors.
Yeah.
God has given us this special opportunity. Mutual funds do not own 100 baggers.
No, but Madhur...
100 baggers must come when the company is identified very young and you cannot buy large parts of it.
But
It's illiquid, stock is not available, and most importantly, how do you buy big positions in India? साहब दे दीजिए ना 2-3% दे दीजिए साहब आप पहुंच गए प्रोमोटर के पास सर दीजिए ना सर अच्छे लोग you can't do it but if you are an individual you can buy.
Yes.
So you can't do it in a $1 billion fund.
No, but you can do 2%, 3%.
Then it won't move the needle.
No, it will move the needle.
Not much.
No, I think I disagree with you, Bhatta.
Yes.
I think it has moved the needle for us.
At 2%.
Yes, it has moved the needle at 1%. If it is a company has gone 200 times or 100 times, it moves the needle. The art and the science is that you don't have the conviction to hold it till it becomes 100 times.
Whatever. What I will say is, in the 25 years that I have seen, mutual funds came to India in 1993, the first serious one.
Sure.
We are in 2014. In 21 years, across every single mutual fund in the country, I have not seen a mutual fund own a stock which has multiplied 100 times and it has owned it throughout the 100 times. Not one.
He has done it.
I think we'll discuss
There'll
of
be a
this.
sale.
We'll discuss of this.
And the rarest of the three attributes, sometimes found in women, almost never found in men, the patience to hold them. You've held through your Hero Honda position from 30 rupees to 3,000 and in the process even collected 1,200 rupees dividend. You must have gone through a lot of goosebumps in this period. A lot of people would have scared you to get you out of the stock.
I think the comfort of the purchase price and 1200 rupees dividend is the actually starting point.
Right.
If you buy at 3200 and then it goes to 1000 rupees down, you are shaken, howsoever convinced you are about the framework and everything. But having said that, probably I may be able to do it now with far more conviction if I have clarity. I think the purchase, at least in Hero, the purchase price conviction, and immediately the moment you bought, next day itself the higher price. That's what really worked. So you can't take away the comfort of purchase price. I don't think there is much return. Again, what is the importance? Because as far as the compounding is concerned, it's independent of whatever your purchase price 12 years back. Today you see you have to be selling it today and looking at next 5 years. But I don't think in real investing it works that way. Though the fund performances are like a rolling 12 months or 3 months or 1 quarter, 1 day and things like that. But the purchase price comfort in the individual investing is massively important. I don't know, Bhatta?
Absolutely.
Can I just say, one thing to Bhatta? One of our mutual fund scheme itself is like 100 baggers.
That, of course.
I'm saying, you bought Reliance Growth Fund 18, 19 years ago at 10 rupees.
The power of compounding, Madhu.
Till the time I didn't buy something which added to it, it can't be 100 bagger.
No, Madhu, sorry. Let me clarify this so that it's absolutely crystal clear.
Yeah.
Okay? You'll never get it wrong after this. I do not know of a single stock held in a mutual fund, bought at inception and held throughout the period, which has multiplied 100 times in that same scheme.
We have few of them. I'll discuss
Fine,
of
if
this.
you do, I mean, it's my fault. I haven't noticed which they are. But
There are few, clearly there are very few.
no, they have to be held.
Yeah, it has been held.
See, the history of private mutual funds are only 12, 14 years. I mean,
No, 21 years.
What
Templeton, Franklin Templeton was there in 93.
Yeah,
I
but-
think, you don't hold the entire quantity. Let me just clarify that you don't hold the entire quantity, otherwise your proportion of your
Goes about
weightage
10%.
on that,
Would have gone-
on
Correct.
that will go
That's the
disproportionate.
whole point.
Yeah.
So that's the point he made. No? To have the patience to make a big allocation and then hold it throughout your life
Yeah.
gives you the maximum benefit, because the mutual fund industry itself has fairly, what shall I say, in polite conversation I should say, strange rules.
Yeah.
Because once your weightage goes beyond 10%, it's not seen as prudent.
Sure.
Your weightage has to go above 10% if you have a 100 bagger. The mathematics of investing suggests that you cannot own it in a mutual fund, much as we may debate this. It is simply not possible. The odds are stacked against you.
Absolutely, Sanjay. So those are about the exciting ideas which you need to kind of trim based on the rules and regulations. But Madhu, do you have any regrets on having sold too early? This patience to hold. I'm sure early, in the transition from 12 crores of assets to 12,000 and then to a lakh crore asset management, you must have had a lot of these regrets where you sold out too early.
तूने यार नवीन दुखती नस पे हाथ रख दिया. I think not one, we have huge number of regrets. Huge. Let me just repeat. Huge number of regrets. And I wish I can just do my investing journey all over again, what I did 20 years back. It's like, go for exam paper. After coming out of the exam, you realize that I could have done this right, I could have done this right, I could have done this right. It is like, I feel exactly like the same. So I think we identified many number of very, very good companies, but either we did not buy them with huge conviction, like we did not allocate capital, we did not buy the same stocks. Rather, we always looked for the next Infosys or next HDFC Bank.
Yeah.
So that was, and maybe a lot of times, when things became very expensive in a shorter period of time, we ended up selling them. And after that, you can never get back to your position. So I think
Sure.
there are a lot of regrets in that area.
Sure. Going back to the framework of SQ GLP, Sanjay, you very beautifully, summarize the importance of management in a, lengthy session at Flame. Quality of management. You are a guru on, kind of presenting the various aspects of management.
Ramdev, next wealth creation study should actually be on this.
So you want to just talk a little
Assessing
bit about,
management. I think it's a vital part of investing. It is incredibly good adjunct to this study, and it is incredibly helpful to investors to have a robust framework to assess management.
So, would you run us through a quick, what are the 3, 4, 5 elements of a framework that you created for yourself over a period of time?
A lot of things. I mean, how do they handle adversity?
Okay.
In a good economic environment, horses and donkeys look similar. It's in an adverse economic environment that high quality management stands out. Second is, are they thinking about the future? So a lot of Indian companies, and I'll give you the most simple example about thinking for the future, nothing about creativity, innovation. I'm not the creativity, innovation type of guy. Succession planning. Majority of Indian companies are family owned. So you got to think, you got to have within the company a framework for thinking about succession.
Yeah.
Why do all of us love multinationals so much? We say they're very well managed. Because you don't get nasty shocks in a multinational. That's another important element of management. Third is capital allocation. Capital allocation is very important. What you do with the money that you earn, how you look at allocation of monies that you raise, because that needs to be rational. Many people chase growth which at the margin is not as profitable as their past growth or their past profits. So Ramdev has made this point many times. Bruce Greenwald, in that framework of what is really high quality growth, which he was talking about. It is incremental profits. Incremental return on capital employed must be higher than historical return on capital employed. If incremental return on capital employed is lower, then really you must ask yourself, why am I putting more and more money into the business? To earn lower and lower returns. So that's another framework to assess management. I think a very important way to determine that is long-term ROE, which is a number. I've heard this beautiful phrase, मुझे ये management अच्छा लगता है. They're not film stars. आपको अच्छा लगे या बुरा लगे is irrelevant. This is not about subjective feelings of emotion and wellness flowing in your heart. The numbers will suggest it. If they are high quality, you'll see it in the numbers. And you won't see it in 1 or 2 years. You'll see it over 15 years. Whenever you pick up the phone and speak to Ramdev, he's a very good guy, to learn good investing from. So Vaibhav is blessed. His son is blessed. Because the first thing he does is he goes to a thing called ratios on capital line. Yeah. And he has the ratios for the last 15 years in front of him. And there's no argument. Because the numbers are there. You can't fight with him. You can't sell him some story, weave some intricate thing and it's got lovely tapestry on the pallu and you're telling Ramdev, ye hoga, wo hoga. He says, boss, ye to barsati hai. Iska ROE to 9% hai. So it's very tough. And that's a hallmark of good management. I think in the Indian context, good management is also one, and you see this very often, are people who don't overcommit and underdeliver.
That's big. Yeah.
It's very common in India.
Right.
People who deliver what they commit, I think that's great. That is really integrity. In a crude way, a person who does what he says is the best test of integrity. So that's how you hunt for integrity.
Sure.
It's demonstrated to you. And the best one, I think, but it's not easy to quantify this, it can't be quantified, is how management deals with failure. Do they try to rationalize it? Are they dishonest about admitting failure? Do they blame it on the environment? हमको लाइसेंस ही नहीं मिला, गवर्नमेंट ने डिले कर दिया, ये हुआ, वो कंपटीशन बदल, द इंपोर्ट ड्यूटी बदल गया. अरे तो मैं क्या करूं यार? We are all competing in the same industry, ना? Others are making money, you're not. So I think the ability to accept, learn from, and use failure constructively to go forward in the future. That's a hallmark of great management. Hero Honda. If you look at Hero Honda management, when they came in, actually they had a huge competitor up against whom they were fighting, Bajaj Auto. And they systematically saw what they needed to do and needed to do different. And then got ahead. And the belief that yes, we can do this, and once we do it, the results will follow.
Yeah. And Ramdev ji, one of the things that has changed in you most starkly over the last 1 or 2 years is your heightened focus on growth. I mean, the choice of Page over a Colgate, or the choice of Sun Pharma over a GSK Pharma. There are innumerable examples, but I think the importance of growth in your framework with quality, longevity as a table stake has really gone up. And it has, I think, somewhere contributed, helped, in the whole process of asset allocation or stock selection. Do you want to take us through this, G in this SQGLP?
Yeah. So this happened maybe, because I was struggling with quality and growth.
Yeah.
Because after 94, 95, when Buffett was introduced to me, I got to know about him from him. So after that, he was about terrific businesses, franchises, high ROEs. So those things we practiced, but we didn't focus on the purchase price. So in 2002-03, I read Benjamin Graham, Intelligent Investor. So that set the gear right. So we got the valuation right. Now you got the quality right, you got the valuation right. But in between, this growth was missing. So I was thinking that high quality franchises are per se fantastic way to invest. So they were like they are day one in all the IIM campus, and they have unfair advantage of getting high quality talents. But you don't have unfair advantage of being a great investments in the market. For that you need fundamentally high quality and growth together. So there are very few places, very few spots where you get very high quality and high growth. You get typically mediocre businesses with high growth, or very bad businesses growing very high. So markets are more about, like if you look at the index, it earns about 17%, 18% ROE. So the amalgam of the entire 30 or 50 companies is very, very mediocre. So when you push the ROE to more like 25, 30, 40, maybe 80, 90. So in that space, if you get a company which is growing also, so you don't need any money for growth. In fact, they throw a lot of dividends, like Hero or Page and all these companies, and yet they grow at 30, 40%. And market is set on not giving more than 40, 50 P multiple at best, if at all they give it. Otherwise, you get all the auto companies, which are brilliant companies, at actually less than 20 P. I think the highest P multiple of Hero, even while they were growing at 30, 40, 50%, was never beyond 20. I think history's highest P multiple is 21. But you look at year after year, they have given 30, 35% return. And that's how I think first 25 years return is about 32% compounded, plus dividends. So market leaves this kind of blind spots. And blind spot is between quality and growth. When these two come together, markets mostly, it can go overboard this time, because this time it looks to be quality and growth rally rather than pure growth rally. Earlier it used to be pure growth, irrespective whether there is a profit, no profit, just growth. Go after the blind growth, past growth, future growth, just buy them. Page view, this view, that view. I think market has moved on. After 2007, I think market is in the mood to overprice the quality and growth. And that's where the trap will be. So that has changed but what I'm saying is you buy quality, you buy growth, but buy at reasonable price. If you can get it very cheap, pile on, big time. But if you don't get it, go push your valuation a little bit. But quality should be non-negotiable, because 90% of the problem in the portfolios come because of low quality companies coming into the portfolio, including mine. So it's not that only our clients are suffering from that, because 90% of the stocks don't make money in the long run. That's the difference between gold and stocks. In gold, you go anywhere, you get the same gold. Maybe price will be a little different. But when you come to the stock market, there is a 40 karat gold, there is 24 karat gold, and there is 4 karat gold. And 4 karat gold has more shine than 40 karat gold. How do you figure out? You need to be more than a open heart surgery guy. You have to be a scientist. So
I'll give you an example of a company that features on his list, and I was very curious that it's made it finally. It's called Ajanta Pharma.
Now, be careful about SEBI guidelines.
No. I'm just talking about the history.
Yeah.
This is a company that most people would not associate with being a 100-bagger.
Yeah.
It was there for us to see. Everyone.
It has happened in 4 years, 5 years. Just, we have lived it.
But
We're living
the
it.
point is, and this is the point I'd like to make, that sometimes there's this wonderful saying in English, familiarity breeds contempt. If you're too close to a company, sometimes you are unable to buy because you know stuff which is not really relevant to the fact that this company is going to perform over time, and that takes an undue weightage in your mind. In your assessment, when you make that overall assessment, trivial factors, which should not worry you too much, begin to play a relatively more important part. And so this judgment that you make, as you said, growth, quality, longevity, these are all, they're going to come together in a 100-bagger. So you begin to make the trade-offs because of what you know. The past history sort of shades your judgment about the future. Yeah. And this is another factor. And it happens often enough. So these are the regrets that sometimes I have.
Yeah.
You asked Madhu about regrets that he has had. This is the kind of regret that I have sometimes.
Sure.
Can I just come in here?
Absolutely. Yeah, sure.
I think, there are 2-3 things I would like to say with my experience. That every theory is only basically can be justified in a period of time. So if you bought quality between 2002 and 2008, you got butchered. I'm telling you,
With
go
growth.
with growth. I think there are a lot of companies. They were even growing or not growing, but they were very good quality companies.
Yeah.
Basically, so at that time, it was not fashionable to talk about a lot of these FMCG companies, because you see that for 6-7 years they did not make any money. And then you talk about any infrastructure company, it was like a 50-bagger, 100-bagger. Okay. And you talk about any real estate company, it was 10, 20, 30-bagger, 50-bagger. So for the benefit of people, I must say that if you have a very stringent list, then you should be in a position to trade off and have the real patience of Mr. Ramdev Agrawal, that to find that one company, I will give out 90 ideas which may go up between 100 to 500 or 1000 or 5000%, but I'm not going to give in. And I think that is a real challenge of investing and watching the markets on a daily basis. So which is why I think we have a more flexible approach, I would say, maybe a lot of out of compulsion rather than by choice, because when you have
public
so
money.
much money and so much public money, and when you are judged by force or by choice, at least on a quarterly basis, I think our distributors have also become very lenient to us. They don't judge us on a daily or a weekly basis. So at least once in a quarter, you are being judged. When you are judged in that framework, you can't afford to be very rigid. And I think for what we do, if we really find a fantastic business, okay, and everything else is there in that business, and if you find it a real good valuation, so I call it like transitory multi-baggers or transitory return companies.
Yeah.
So we will go and bet on that company, and we will hope that before the music is off, at least we'll be able to get off. No, and we have done it. In some cases we have done it. Some cases the music is off, we are still sitting. So I think so if you have a little more flexible approach, because see, quality of management, something figured out, 1 or 2 pharma companies figured out in Ramdevia's list today. You can even debate the quality of those managements even today, after they are like 25 or 50 baggers. Forget at the time when it was worthy of investing. And I'm being told, Hyderabad jana nahi kabhi. Udhar ka company, 100% fraud hoega. And some of the multi-baggers and some of the real high return companies have come from that city. I think, you have an absolute rigid approach. It will work, but you have to have the real patience and the ability to go by that rule book which you have created for yourself, which I don't have. So I don't practice it to the T. I know it that this is some guy I can't live with for next 10 years. So when I'm buying, I know it. So it is there in my mind, and over a period of time we have been learned to distinguish. Okay, this is a guy we can learn to live with.
Yeah.
And the third and the most important thing is, what do you do when you have a period like 2013? All theories go off. When rupee is at 70, when oil is at $140, world is going crazy, and people are leaving countries. You go and meet 10 entrepreneurs. All of them are saying, because I'm thinking of migrating my son to Dubai, I'm thinking of migrating my daughter to Singapore. That kind of environment, then do you have the real patience at that time to stick to that broad framework which you made?
Yeah.
Which is why I think in our investing, in our style of investing, we are feeling to be a bit more flexible, not as flexible as we used to be 10 years or 5 years ago, but little more flexible than what Mr. Ramdev Agrawal is.
Just what Madhu is saying, just to make it, in 3 cycles, that's the benefit of having the cycle scene. The bull, first was 85 when we were kids. Everybody was just figuring out, he was in college, we were like trying to become masters. 92 is the birth of this company. Thanks to that boom, we are here. 2000, we know it all. So somewhere as the market starts rising, the so-called long-term bull market, this is the first time I am experiencing that all the gurus are saying there is going to be long-term bull market, and the bull market starts. As button dabaya, bull market chalu ho gaya. ऐसा पहली बार हो रहा है. Otherwise, you have a lot of disbelief when the bull market starts. I exactly know in 92, we were going for a marriage and people were shorting till the plane left the terminal in the curb. There was so much of pessimism, and when they came in, their shirt was lost. The bull market was so strong at that point of time. So at some point of time, the bull market, and particularly in India, the fad takes over. Fad, which is irrational. It is called fad because it is not backed up by rational earnings or sales or whatever. So this world is famous for, and every time they find new ways of losing money and new fads. Okay, so there are enough, but still they find new one. So which one will the new one? Which will create many transitory multi-beggars. So the smart guys like him, definitely they will ride it and they will get off and benefit the shareholders. Bhatta has been fantastic in Y2K. He had Hazarias from SSIs and all, and probably you got out also at some crazy price. I have been the worst, it has been my worst disaster. I bought a company, Mastec, at about 200. In 9 months it went to 4,000. 20 times in 9 months. I wanted to make a long-term capital gains. I got less than 200 back.
But I think from what both Madhu and Ramdev have said,
Fad investing, you need a real smart guys. I think in audience we have Ramesh, and so a lot of these, all of us, there's some guys who are very good at it, and it will come. It is just making.
So, folks, Ramdev ji has announced the coming of the bull market and the importance of fad in bull market. And I think e-commerce and e-commerce is the most obvious, fad that we can think about. I definitely would like to pick your brains, each one of you, on what do you think e-commerce could be the fad of this bull market?
leaving aside,
Yeah, leaving it, because that's the most common response that I would expect from any panel. What could be the potential fads? Could it be defense? Could it be agri? I don't know what. I don't want to prompt names to you. But if you look at things around you, what has the scope to multiply most exponentially as something which is small today? We thought in the previous cycle that organized retail could be the next big thing in India. There's Walmart there, there's Pantaloon here, and this could be the Indian Walmart. What could be the potential fads? E-commerce. E-commerce is kind of obvious.
So two. I can think of two.
Okay.
And both of these are quite iffy. But since you've asked me the question, it's my job to do it, as I see it. One is, there's this big thing in the US called genomics, which is driven by gene sequencing. So you break down the characteristics of the gene, which now, because of the advances that they've made in the USA, can be done within manageable costs. And from that understanding of the human gene, the attempt will be to develop drugs rather than through a process of chemical synthesis based on a customized approach to the diseases that people are likely to have, based on the understanding of the human gene, right?
Right.
So to do this, you will need cheap labor to process huge amounts of data, and to process it quickly and with very low room for error, because human life is involved. And India will be, once again, like we saw this Y2K business, this will be another manifestation of that same thing. A lot of countries will do it. It's not that India will be alone in it. But this same thing, American values, Indian, we'll have a rebirth of this wonderful phrase.
Indian cost, American value.
Indian cost, American values. That thing will operate here again. The second one is contract manufacturing. Not necessarily just in pharma. It can happen in other places also, like it can happen in agrochemicals. It can happen in a number of places. Because contract manufacturing is basically something where this whole idea that when you have to manufacture in very small lots, but a very wide variety, it doesn't make sense for the really big guys to do it. To make 10 kilos, 20 kilos, 5 kilos, 1 kilo of a particular thing. Because they're not oriented to doing it. Or even in tires, you take Balkrishna Industries.
Off the road tires, yeah.
Yeah? So you have massive variety, but the problem is inventory and running inventory for your end customer. So Redestein wants tractor tires, someone else wants, whatever, different types of tires. But the guy who can handle that challenge, manufacture in very small batches, preserve the confidentiality of the client and deliver to scale, to quality, to specs, that guy can charge a fantastic price for doing it. And you're not sensitive because you're still doing it for only 1 ton. So the buyer is not at all price sensitive. So you can make a fantastic living. Now if you say for manufacturing 500 tons, I'm going to charge you that same price, you say get out. I'll do it myself. But when you're doing half a ton or 1/10 of a ton, he's okay.
So contract manufacturing.
So contract manufacturing across bunch of places.
Madhu, what do you think?
I don't have any.
I think there is one big theme which I can see. There are a lot of sub-themes you can derive on. So last 10 years or 12 years belong to rural India. Everything you could think of went right for rural India, whether it was starting from MSP to Narega to productivity gains for rural India, to land prices, to rural consumption. I think next 10 years, clearly in my eye, belongs to urban India. So everything which you can think of will benefit because all the noises which are being made, whether you talk about speed trains, now they are not going to run in my village. Okay. So whether you talk about expenditure in railways or infrastructure or for instance, even pharmaceutical or IT, there are a lot of, in a way, urban-centric themes.
Urbanization.
Yeah, urbanization, or whether even tourism, for that matter.
Yeah.
Hotel business. So I think it is not yet clear what will be the fade, but I am sure we will start to see some kind of a fancy by the market in one of these themes, which looks very unpredictable and unbelievable in an early stage. And again, based on my experience of last 15 years, I can say whatever it starts has to end in a bubble form. Right. It can't end before.
Right.
So we saw Infosys ended at 200p in 99-2000. So what looks today and maximum amount of money was being made in IT between 1998 and 2000.
Yeah.
When stocks went from 30p to 200p or 210p.
Yeah.
And that is where all the people who have got the framework will give in at 40p. I think, please don't misunderstand me, but there are a lot of people who have the framework that 40p ka stock humko nahi lene ka hai, or it has become too expensive. And when you realize, in a hindsight, maximum amount of money gets made once it catches the frenzy and people have the left out feeling. And for all you know, there is a fight going on in quality companies today. It has become fashionable to buy anything which is above 50p and 60p. So I am saying maybe this is one fight which is there already on in the market.
Yeah.
And I am saying it will not end soon. It may go up to 200p and it may last for a couple of years.
Before all of us succumb to it.
Yeah, but I think urbanization as one theme is what we have to look at from a market perspective over the next 10 years.
Yeah. One of
Two other bright ideas strike me.
Fantastic, Sanjay. Roll it in.
Is on the word bright. As I was hearing Madhu, one is, I think India will produce a world-class analytics company.
Sorry?
A world-class analytics company.
Okay.
But all the tech companies are doing that, isn't it?
Yeah. But in the end, 1 or 2 or 3 will emerge as the IBM or the dominant player, like Mu Sigma. We already have one in a sense. But Mu Sigma is still small. But I'm saying in the next 10 years, I'd be surprised if India didn't produce a world-class analytics company. Okay. Essentially because in statistics, some of the finest minds in the entire world are Russians and Indians. And the Russians aren't pursuing this. That's the core skill set you need. And the cost of hiring a guy from ISI Calcutta is about 15 times cheaper than anywhere else. Okay, so that's one. The second one where I think big money will be made, except I don't know how soon it'll happen. But if Ramdev's NTD is right, specialty retailing. Specialty retailing. Not, a store selling children's clothes, not that kind of retailing. But retailing focused to, I'll give you an example, luxury watches. Or lots of things that we cannot buy in India now, which Indians aspire to buy.
It's like urbanization.
Like urbanization theme. Absolutely.
Whatever, it could be a Home Depot kind of store in India, a high-end Home Depot kind of store.
Sure.
Home improvement will be a big part of, as wealth comes to the middle class, you'll want to improve where home improvement will be a big deal.
Right.
So you want to buy the best, go to one place under one roof, buy it.
Yeah.
And that I think will create serious money.
Turn to the last question of this panel discussion. So one of the very interesting findings of the wealth creation study, the 100x theme, is that in the last 15 years, while there are over 40 or 40 to 45 stocks which have multiplied 100x, there are actually 160 opportunities which multiplied 100x. Now, what is an opportunity? So, for instance, there are two companies, and this is a revelation to me, that you could have bought Motherson Sumi or Shree Cement anytime in a space of 11 years, at any point in time, any year, and it would have still multiplied 100x from that year. I thought 100 bagger is like one point in time, one flash in life, you miss that and you miss the 100 bagging. Here, you would have multiplied it 100 times even if you bought in the 10th year of its performance. There's another company called Lupin, which you could have bought in a space of 9 years, any time in the space of 9 years, and it would be 100 bagger. So, 5th year into its glory, which basically brings me to the point that a lot of the stocks that you own, as Madhu pointed out, rather than looking for the next Infosys or the next big idea, some of the stocks that you own yourself today, maybe in the 3rd or the 5th year of performance, may actually be 100 baggers even from here.
Ramdev has a wonderful way to express this, and I'm a great subscriber to this. Jab jaga, tab savera.
He is the guy who says this.
This is the essence of what you're saying.
So when you dig into your own portfolios, leave alone the 6,000 stocks that are listed, leave alone finding the next fad, where are you most hopeful of a potential multi-bagging, if not 100 bagging, from your own portfolios today, leave alone looking out?
Yeah, Naveen, I would put the question to Bhatta, particularly and Madhu, that is it a low probability event? See, if
finding a 100 bagger.
Yeah, finding a seriously multi-bagger, in the sense that if market has done between 25 to 30 years 100 times, index itself dumb thing, it should be very reasonably high probability that you can get a high multi-bagger in this kind of environment.
Okay, there's a guy in the house who can answer this question because his ability to understand the odds is superior to anyone else I've seen in my life who's in investment management. Where's Sunil Mehtani? He was here.
Yeah. I think he's...
Sunil Mehtani is not here.
Yeah, he's there.
Oh, there he is. So Sunil, what are the odds? Yeah, given the fact that, the index itself has multiplied something like, 100 times in 26 years, which is 50 stocks or 30 stocks. So if you added a 12-year horizon or a 15-year horizon, what are the odds of finding a multi-bagger here, if you're disciplined? Should it be pretty high?
Just one sec. He's getting the mic.
Why don't you call him?
No.
Sunil, why don't you join us here?
Yeah, go ahead.
So I live and work in the US.
Sunil, you want to just stand up so that the audience can see you? Thank you.
I live and work in the US, and I can say that the odds of me finding a 100 bagger there are approximately 0.
Can't hear him.
But here it seems like if you're smart and patient and do the kinds of things that Ramdev has been talking about, look for the growth companies, look for
Can't hear.
Sunil, why don't you come over? This is a very important question actually.
And he should sit here. मैं जाता हूँ.
No, no.
I'll get up.
नहीं, मैं जाता हूँ.
So you can use this
Yeah.
one.
Now it's clear. Yeah.
Sunil, you can come and sit here.
No,
so
no, no,
you'll
it's
be at
okay,
peace.
brother.
Yes, come.
Yeah.
No. Sit. Relax here.
I'll have to punish Sanjoy for this afterwards. But so in India, it seems like there's plenty of opportunity because it's in such a different stage of the economic cycle compared to a country like the US, which is where I spend most of my time. I think that it takes a lot of work though to identify any kind of multi-bagger. Whether you're looking for a 5 times, 10 times, 100 times, that you have to be very careful in identifying all of the characteristics that Ramdev's been talking about. And then being very patient both in doing your homework beforehand so that you fully understand the company, and then continuing to get to know the company better and better because it doesn't happen overnight. And then being very, very patient because it's too easy to sell way too soon. Apple stock is now trading at $110 when I last looked at it. I bought it a few years ago at, if you adjust it for splits, I bought it a few years ago at the equivalent of about 90 cents a share. And it's now about 120 times that price. Unfortunately, after it had gone up about 50% to about $1.35, I sold it.
A+ for honesty.
So I had a 100-bagger on my hands potentially, except I didn't know it. And I don't know what the feeling is like.
Sunil,
Unlike
just one
Sanjoy.
question. Why did you sell it? iPods were still selling.
Because I bought it for the wrong reasons, or partly the right reasons, partly the wrong reasons. See, when I bought it, the price before adjusting for splits was $14 a share. And it had $11 a share in cash and investments. And so for the whole business, you were paying $3 a share. There were about 340 million shares outstanding. So you're paying $1 billion for the whole business.
Correct.
Today, the market value of the business is, including the cash that it has, is about 700 billion.
Correct.
And then it's got maybe, I don't know, 150 billion,
180 billion cash.
180 billion of cash. So you're paying something like 500 billion for the business.
25 billion. Yeah.
So part of my thesis was it was so cheap at $1 billion for the whole business that I wouldn't go wrong.
Correct.
But I also had this theory at the back of my head that Apple's no longer just a high-tech computer company, but is also becoming a consumer products company. They'd introduced the iPod. They were talking about more products in the future. Unfortunately, in about 12 months, it went up 50%. And I said, I've made such a good profit. I don't know anything about technology. Let me sell it. So I'm the wrong guy to talk to about 100 baggers.
Not at all. I think we do this all the time. Not at all.
So you think probability of getting multi-baggers in India is far higher? Because in US, 100 times for the index takes it in delay almost 50, 60 years.
I think this is very interesting what Sunil has said. Here's a guy who's sitting here who bought a company that a lot of Americans knew about. I'd venture to say Apple is a reasonably well-known company in America even when he bought it. Okay, which should have been...
Very well.
Yeah. And the fact that you could have bought it at that price on exactly the logic that he outlined. Incidentally, the logic isn't at all abstruse.
Yeah.
It is the way that any sensible human being's mind should work if he's a prudent investor. Absolutely old-fashioned logic, Graham-type logic here. Yeah? Now the elements here, and this is the instructive part, and Sunil deserves better than an A+ for honesty. I think there isn't a grade invented to deal with his honesty, but it goes to your point of patience. How do 100 baggers come about? I think patience is a huge part of that.
But I think there's one thing that you guys haven't discussed enough about a 100 bagger, which is you have to want a 100 bagger. Meaning when you're buying it, you have to be able to say, I can see this potentially being a 10 bagger, a 20 bagger, a 50 bagger.
That mindset at the time of picking this stuff.
Because most people are happy if you make a decent gain, right? 50%,
Yeah.
100%. 2 bagger is a big deal.
Very big.
But if you have the mentality where when you're going in, you're saying, I want to look for the ones that can be 10 baggers, 100 baggers, you look at everything differently.
Yeah.
You don't look at it saying, I'll get out at some point if it's a 2 bagger or a 5 bagger.
This book is quite funny. What it says is that you are in jungle to shoot elephants. So don't fire the gun till you find an elephant. So the mindset has to be what you're saying.
Exactly. And Buffett talks about that a lot. He talks about investing in companies and buying companies where he can see decades of growth ahead of him. Not just years. And here's an 80-year-old talking, where he's saying, I can imagine it growing for decades to come, long after he's gone.
No, he'll not be gone. He'll be watching over us.
Yeah. So just completing the last question. So you get tens of years to pick a 100 bagger as well. So Sanjoy, dig into your portfolio. Which one would you bet on, which could potentially be a 100 bagger? You may have made a lot of money on some of those stocks already.
No, I bought none of the transitory ones also.
No, I'm only talking about the enduring
One
ones.
thing on
I'm
the
only talking about the enduring ones.
Yeah, so there have been, I've got lucky, but I must say one more thing. And I know it's not the best place to say it, but I think it's very important. I think in investing, we spend way too much time in terms of how we allocate our time to thinking about buying and all the facets related to buying. Portfolio construction, sectors, businesses, valuation,
Selling is coming.
all of that.
So you're turning to the dark continent now.
Sorry?
You're turning to the dark continent.
But
of
that's how
investing.
you make money.
Yeah.
He'll tell
You
his
got
pain
to,
now.
smart selling will make you just as much money as smart buying, whether Mr. Buffett agrees or not. And it's time that he agreed, because he's getting older.
Madhu, what do you say? Smart selling?
I agree.
So my sense is this is one which could become very large, conforming to the value migration.
Great. Lots of ideas, lots of themes, fads that may potentially come across. Thank you all very much for taking the time.